Hi everyone, I'm Ted Thomas, and if we haven't met before, well, hello, and we're in my office right now, and we're going to talk about tax lien certificates and tax deeds. Now, we get tons of questions on this, and you can go to the question line if you want. We'll answer them there, but I want to do just a short video and show you guys exactly what's taking place. So the tax lien business has been going up over this past couple of years because we have so much foreclosure and such a bad economy. So if you're suffering from the bad economy, take a real close look at what we're going to do now, because this would be a place where you could make yourself some money. So I've kept some notes along. This isn't a fancy production, but let's look at the graph I've made here, and we'll kind of follow this along. And we're not going to take 10 minutes. We're just going to take a few minutes, okay? So this is just representing the average home. And then what we're representing here is a tax certificate. So if the person doesn't, or the property owner does not pay their taxes, what the county will do is they will issue a tax certificate. Now, that has a big advantage for you because you can actually buy those certificates, and I'll come back to that, okay? All right, now, in half of the states, so let's just think of the United States and kind of divide it in half, and I'm just going to be back to you for a second here and do this. Okay, so that's the tax lien side of the business. Then we have another side, and that's the tax deed side. Now, a lot of real professional investors love the tax deed side because that's where you're going to get a property. But same situation takes place. If the property owner doesn't pay the taxes here, the local government issues a tax lien certificate. Now, the tax lien certificate is nothing more than a piece of paper like this. That's all it is. And it represents a debt on that property. Now, the brilliance of that whole thing is if you own one of these, you can make a lot of money, and I'll come back to that in a second. Okay, now over here, we have the same situation taking place where we have a property owner who hasn't paid the taxes. In about half the states, the state and the county will actually repossess. They'll take the property. They seize the property, and then they sell it at auction. Okay, now, when they sell that at auction, you're actually going to receive a tax deed to the property, or a treasurer's deed, or a county deed of some kind. The point is, in both cases, there's a way to make money. Now, the first case is here with tax certificates. So let me cover a little bit more about that. That's relatively easy, okay? So if you were to buy a tax lien certificate, these are various rates. Now, the lowest rate I've ever seen was 8%, but generally speaking, they're 12, 14, 18, all the way up to 36%. And it depends upon the state. I don't decide. The local people don't decide. It's the state decides what this rate is. So if you buy a tax certificate, remember that's just this piece of paper that represented a debt on that property. If you buy that, this is the rate of return that you would earn on that certificate. Now, that's a good solid rate of return because the county pays those. So you don't have to worry about that. You're going to invest with the government, and you're going to get a check back from the government. So that's a real important thing for you to be thinking about. All right, now down here, we're going to talk about the tax deeds again for just a minute. Now, that's the same situation. People haven't paid the taxes. Now, that could include everything from any kind of real estate. In other words, a shopping center. It could be a local strip shopping center. It could even be a home. It could be whatever, farms, ranches, all those things. If they don't pay the taxes, what's going to happen is the people are going to lose the property. The government's going to seize the property. Then they're going to resell the property and pay the taxes, and that's what they do. All right, so that's kind of a brief explanation. Now, you would probably like to learn this in a couple of different ways, so let me mention a couple of ways. One, you can come to our 3-day event. We'll actually teach you all the step-by-step process, and we'll teach you how to raise your hand at the auction and do that. So we can teach you that. Now, in addition to that, I'm going to show you a very short video here in just a second, and that video is going to be Carrie, and you're going to see her on the platform, and she's going to teach people how to do this online. So you could be doing everything we're talking about here from your kitchen table, or you could just sit down and get on the internet and do the same thing. So we teach it both ways. We're going to show you how to actually do it physically, and we're going to show you how to do that online. All right, let's see if I have another slide here that I want to explain. Yeah, okay, good. All right, so this is just kind of a review. If you've never done this before, first time you've ever seen it, this is you. You're going to write a check, and you're going to give it to the government. When you give it to the government's going to protect it and hold on to it. You don't have to worry about your money while it's with the government. And what you just did is you paid someone else's taxes. So when those people come in and pay their taxes, then what's going to happen? The government's going to reverse all that and send a check back to you. Now, you don't have to worry about your money. Don't worry about it because your money is secured by this property. So let me do that all again, okay? This is really a simple investment. It's been around for a couple of 100 years. Okay, number one, you're an investor. So what you do is you take your money and you give it to the government. You paid someone else's taxes. When those people come in and pay their tax, and by the way, 97% of the people will come in and pay their tax. Over a couple of hundred years of doing this, we figured out 97% of the people will pay their taxes. When they do, you're going to get a check back from the government, but let's not forget, you're not just going to get a check back from the government. What you're going to get is you're going to get this wonderful rate of return, 16, 18, 24. Okay, now we're going to teach you in a class how to raise your hand and do it, and we're also going to teach you how to do that online. Okay, here's Carrie. Welcome again to Carrie.
Thank you. So what we're going to talk about is buying liens online. Many counties are turning to the online lien auctions. Why? Well, it opens the bidding up to a larger group of people because you can do this from Canada, you can do this from anywhere in the United States, you can do it from anywhere, from your home, you can do it anywhere. For the bigger counties, it is more cost effective because they need less people to do it. The smaller ones, as pointed out this morning, it might not be quite so cost effective for them, but the bigger ones, it definitely is, and it's easier to run for them. And again, the other advantage is, of course, you don't have to travel.